All right, good morning, Lagos. Good morning, everyone. This is Follow the Money brought to you by Nairametrics. My name is Ugodre, and we do this every Monday, 8 to 8:30, in case you're just tuning in for the first time. This is a show dedicated to Nigerian equities market. And so if you're someone interested in investing in Nigerian stock market, or you have a portfolio, or you have some stocks that you've bought over the years in the equities market, you don't want to miss this show. Of course, if you do miss it, you can always go back to this particular episode or previous episodes on our YouTube channel, Nairametrics TV. Yeah, so you can catch that and other amazing content that we have there. As you know, Nairametrics creates true information, basically give you interesting, financial related content that you can chew on. In case you also missed the last episode of Drinks and Mics, you don't want to miss that one. Pretty feisty, pretty interesting, with a lot of sound bites on the Nigerian economy. All right, so we go right into the market. So pretty busy week last week at the equities market. The all share index ended the trading week at 7th of February with a pop. It rose 1.38% compared to the previous week, closing at about 1,496. Now, why is that significant? I mean, if you have been following this show for a bit now, I did mention there was a time the all share index crossed 100k and then fell below 100k, below 100k at what it's been for years now. But now that we're above 100,000 points, shows the remarkable growth that the Nigerian stock market has been dishing out over the last few months. And so we're now at 104.4 thousand in terms of all share index. Now, despite the bullish price action that we've seen, volumes kind of declined by about 6%, 5.94% to be specific, from the 3 billion shares it traded last week. So we kind of traded just 2.9 billion shares during the week. Now, why is this important as well? Of course, the more volumes you trade, then the more value that the stock market would have created for investors. But nevertheless, stocks were still up, like I mentioned, 1.38%. Compared to the week before. And in terms of stocks that were up, there were 58 of them, 58 equities that did pretty well during the week. So they all gained. And this compares to 52 stocks that gained the week before. So you have more gainers this week compared to the week before. And of course, you have 34 equities that did record price depreciations compared to 44 the week before. So pretty good start for the month of February. That stocks, apart from gaining, they also had a lot more stocks gaining at least in the first week of the month compared to the other week. So looks like Valentine might be looking good. Anyway, I know this is the week. This is the Valentine week. So probably a lot of Valentine stocks out there for those of you who might want to, thinking of maybe gifting someone a stock for Valentine's Day. All right, so still on the market, the NGX Premium Index, which is the index for the big boys, recorded a boost as well, gaining 2.19% during the week. And this was largely driven by the big boys, the likes of FBN Holdings, which gained 5%, Access Corp as well, and WAPCO also gained, and of course UB and MTN also posted moderate gains as well. So the funny thing is that when the NGX Premium Index does pretty well, it tends to drag the entire stock market along as well. So positive stuff from the NGX Premium Index, which of course has resulted in positive growth for the market. The NGX 30 index, of course, that rose 1.42%, while the main board index also gained 0.97%. So most of the other indexes also gained during the week. And so, investors in the stock market all smiled last week because of the performance that we have seen. Now, if you have a portfolio in the equities market, you might want to also check which of your stocks did well or not. Because, like I mentioned, there were over 50 or so stocks that did positively. But on this show, we tend to look at the top 10 gainers and the top 10 losers. Right? So We tend to always start with the gainers, but let's just start with losers. Sister, I want to flip the script. So we'll start with the losers. Champions Breweries lost 6.3% last week. And closed at 3.70 kobo. I don't know if I've ever given my Champion Breweries story. This is one of the worst stocks that I ever acquired. It taught me a lesson about buying stocks without actually doing my due diligence or like checking very well. This was like 2014. Do you all want to hear the story? This is like 2014 or so, and kind of went into the stock at about 7 naira or so per share. And at that time, there were rumors that the company was going to be acquired by Nigerian breweries or something like that. And so went in, bought the stock without even checking the fundamentals or checking whether this was a stock that was worth that amount at the time. So that 7 naira was kind of like a hype, right? And then went in at 7 naira, and then we're anticipating that so-called acquisition or announcement. Of course, it never did happen. It was just a rumor that had no roots, right? And a few months later, that stock just dipped, and then kept dipping. At some point, it fell below 2 naira, and I held it on for so long just to teach myself a very strong lesson. Never buy a stock without knowing its fundamentals. I held that stock for probably a decade or so before I finally sold it off. So you can imagine how much I must have lost on that stock. But it was a hard lesson, and I don't think it's ever gone back to that 7 naira price. Never. So you can imagine over a decade. Doesn't mean there are not a lot of other stocks that have done pretty well, but more reason why when you buy stocks, you want to be sure that you're buying them at the level or at the price that is as close as possible to its valuation, to its intrinsic valuation. Like I always say, price is different from value. Price is what people want to pay for something. Value is intrinsically what that stuff is worth, right? So if you buy a stock that the price is way higher than the value, then you're always going to be playing catch up, right? Because you're just buying into a hype. But if you buy a stock buy a stock that the price is lower than the value, then it's the price that's going to be playing catch up to the value, and that's where you actually make a lot of money. So that's kind of like the trick there. All right, so we go on, end of that short story, to Tantalizers. So Tantalizers up 6.5% to 2 naira per share. Golden Guinea Breweries Tantalizers was down 6.5%, I beg your pardon. Golden Guinea Breweries down 8.9% to 7 naira 87 kobo. Looks like the breweries are having such a hard time. Thomas Wyatt down 9.3%. To 1.85. Mikio Industries, the healthcare company that was listed just a couple of years ago, down 9.7% to 12 naira 55 kobo. That looks like a stock that's like going to be on my radar, because when the stock is down that much, you want to be sure that the price is lower than the value. If the price is lower than the value, then maybe that looks like a buying opportunity right there. Of course, Triple G and Company down 9.7% to 2 naira 23 kobo. Score Nigeria down 9.8% to 3 naira 67 kobo, and then Multiverse down 9.95% as well. And we've got University Press down 10%, and then Suno Assurance, remember that stock, still down, but down 12.87% during the week to make it the worst loser last week. So as you can see, most of the losers here were some of the penny stocks that were the top gainers some weeks back. That is why I don't like buying penny stocks, because some of those penny stocks all have prices that are way higher than their value. So you don't want to put your money in those kind of stocks, because eventually the price will just come crashing down to the value. That's what happens, because it always reverts to the mean eventually, or the mean average. And so when a price is way higher than its value, it kind of always comes down back to that value. It's just a matter of time. It could be 1 month, it could be 1 day, it could be 1 week, it could be 1 year, it could be 2 years, it could be whenever. But at some point, it falls back down to the value. But if you're lucky, sometimes the value now goes all the way up to meet the price, but that doesn't happen all the time. Of course, we go to the top gainers. We start with Presco. So Presco gained 19.69%. One of my favorite stocks, by the way. We're going to talk about Presco later on the show. Gained 19.69 to close at 700 naira. That's the highest it's been in a while. Chelarams up 20.8%. One of the few I don't want to call it FMG, or anyway, it's a conglomerate that is on the exchange, up 20.8% to 7.89 kobo. Northern Nigerian Flour Mills up 21% to 73 naira per share. Better Glass, one of my other favorite stock, up 21% to 86.5 naira per share. Very solid stock, very solid company with solid fundamentals. And of course, we got Sovereign Trust Insurance up 21% to 1 naira 21 kobo. Fidson Healthcare up 24% to 20 naira 90 kobo. Cadbury up 27.6% to 29 naira 35 kobo. These are some incredible numbers. This is a week of stocks that have gained this much in 1 week. Especially for those who always say this, like, my God, I don't want to put my money in there, I'll lose my money. Imagine, look at this. These are like solid companies. And of course, IEI up 29.5% to 2 naira 50 kobo per share. And then Eternal PLC, that's an oil and gas company, up whopping 32.79%. And then number one stock last week, the first week in February, UPDC PLC, which gained 38.5% last week. So in 1 week alone, UPDC, a property development company, at least you can't say you don't know that company. You know, they basically run a chain of real estate properties in Nigeria. So they kind of like buy and sell, and then there are some that they keep within their portfolio, and then the rental income that they get from those properties is what they distribute as dividends to their shareholders. They ran into some trouble a few years ago with margin dips and all that, and then they sold a huge part of their stock, I think, to a custodian, to a huge part of their of the company to custodian investments, and then had a little bit of reorganization, and looks like the company seems to be coming back again. Now, we're going to run down, before we just quickly go on a break, the top 10 stockbrokers in January. Now, why does this really matter? Well, you want to look at top 10 stockbrokers because these are basically the stockbrokers that are, doing the most transactions at the moment on the exchange. And I mean, it doesn't mean that these are the stockbrokers that you should be using, but if you're somebody who trades in huge volumes, or somebody who has, a huge amount of money in the exchange, you want to ask yourself, are these, brokers, one of the brokers that I currently am using? And so we start with number 10. Number 10 was CSL Stockbrokers Limited, one of the oldest stockbrokers in Nigeria. So they had a modest transaction value of 12 billion. Remember, stockbrokers make money when you buy and sell through them, and so they get a commission on both ways. So you want to multiply 12 billion by the commission that, average commission that you pay them. That's basically what they probably would have made. So they made 12 billion. Of course, EFG Hermes Limited came in at number 9, 14.4 billion in terms of trade in value through them. Morgan Capital Securities also was number 8 at 14.8 billion. And then we'll have Apel Asset Limited, number 7 position at 16.8 billion. In terms of value traded through them. And of course, number 6, Meristem Stockbrokers. Meristem Stockbrokers traded about 31.7 billion in stocks, stock market value through them. And then we go to the top 5, starting with Coders Securities Limited. Coders secured number 5 position, trading 31.79 billion. And then Global Asset Management Nigeria Limited, 39.9 billion to claim number 4 position. And APT Securities and Funds, number 3 position with 44.4 billion. And then number 2, very familiar name, Stanbic IBTC Stockbrokers, 46.1 billion as a number 2 position in terms of value traded. And of course, number 1 for a while now, and these guys are on a roll. They basically have been dominating trades in the stock market, and that is Cardinal Stone Securities Limited. Cardinal Stone, number 1, trading a whopping 89.3 billion. I mean, put it into context, and the number 2 was at 46.1 billion. And so Cardinal Stone is doing 9.3 billion. Just to show you how much value and how much stocks are trading through these guys. Kind of looks like they have a lot of heavyweights using them as their stockbroker. So that has been the top 10 stockbrokers in the month of January, as curated by Nairametrics from, of course, the NGX. The NGX usually gathers these details and makes it public. So all we're doing is just curating it. So authentic numbers you have there. All right. So that is the first segment of the show. When we come back to the second, remember, it's the earnings blitzer. Yeah. So stocks are releasing their results, and we're going to be going through some results that popped last week. Some of the ones that did kind of well, or that caught our interest. I'm going to run through some of the stocks. So if you have them in your portfolio, you might want to wait for the second segment. Be right back. All right, welcome back. If you're just tuning in, this is Follow the Money, brought to you by Nairametrics. My name is Ugodre. We do this every Monday, 8 to 8:30. If you missed a part of the show, remember you can always watch it again later today on our YouTube channel, Nairametrics TV. If you are not following us already, you might want to follow. And of course, when you go to Nairametrics TV to watch this show, you're not just going to be listening, you're going to be seeing me right here in the studio as I dish out these numbers. See me sounding like one hip-hop artist. Anyway, so we'll go back to the second segment of the show, and we're going to talk about results. A whole lot of them out. Like I said, it's the earnings blitz, where you see a lot of results being, churned out there on the website of the NGX. So the number of them that we do track are on Nairametrics. So if you may have missed out any of the results or any of the breakdown of those results, you want to go to nairametrics.com to check our breakdown of those numbers. But I'm going to go through some of them at the moment, the ones that kind of caught our attention. So we'll start with Julius Berger. So Julius Berger, of course, are into road construction and bridges and buildings. One of the largest Nigerian companies when it comes to construction, and they are listed on the exchange, making money for a lot of Nigerians over the years. I do wish we could have a lot more of these major construction companies listed on the exchange. In fact, I've said it before that the government should encourage a lot of these companies to list on the exchange. In fact, don't even give contracts to companies that are not listed on the exchange, because that's the only way this wealth gets shared with a lot of Nigerians, because they are listed. And of course, also comes with a lot of transparency. Anyway, enough of that. So we go to Julius Berger's result. They did report a pre-tax profit of 29.5 billion naira for the full year ending December 31, 2024. Now, that profit was 32.38% higher than the year before. This is coming on the back of revenue increase. Their revenue was a whopping 566.2 billion, up 26.9% year on year. And everybody's saying 2024 was a pretty bad year, but look at what these guys are doing. 26.9% increase year on year numbers. Even if you dollarize that figure, it's still represented a growth for the company. Of course, margins was gross profit was 70.3 billion, kind of like flat 3.2 billion, 3.2% year on year. Of course, that's because of the increase in cost that a lot of companies incurred last year. Operating profit, which is one of my favorite numbers, 12.6 billion, down 33%, but they kind of made that up with investment income. So Julius Berger runs a very interesting balance sheet. So as much as they make a lot of money from road constructions and buildings and all that, they still have a very solid investment business that brings them solid money. Imagine making 20 billion in investment income alone. That's basically the revenue that some investment companies make in 1 year. That's what they're just making on the side. That's like their side hustle. So they make 20.2 billion from that, and that is really what drove their pre-tax profit to 29.5 billion. At the end of the year, profit after tax was 14.9 billion. And Julius Berger is now at least on the balance sheet level, what 1.1, just slightly over 1 trillion naira in terms of balance sheet. Share price closed 139.8 naira per share. Julius Berger is trading at 14 times his earnings. Remember what I said, if you've been listening to this show, when a stock is trading at 1x, so the closer it is to 1, the cheaper that stock. The further away it is from 1, then the more expensive that stock is. So at 14.x, it will sound like Julius Berger is expensive, But what you also do is that, okay, what is the closest stock to Julius Berger, like within its own, industry? If those stocks are trading within that range, then you could say, well, maybe it's just cheap. That's a like peer group value. But if they're all lower than 14x, then you might say Julius Berger is expensive, right? I don't have that information at the moment, but Julius Berger trading at 14x. Now we go to Presco. Presco also announced its full year numbers. I mentioned it earlier in the show. One of my favorite stocks out there, Presco and Okomo Oil. These are stocks that have constantly delivered revenue increases and profitability growth over the last decade. So imagine going through all the cycles of challenges we've had in this country. These guys have always posted solid numbers, and I'm proud to own some of those stocks as well. So Presco announced its full year profit. Full year profit was 138 billion. 128 billion, I beg your pardon, pre-tax profit, which was up 156%, 3 times higher than it was a year ago. Revenue, of course, was 198.1 billion, up 93% year on year. Gross profit was also doubled to 135 billion. And of course, they also made a lot of gains from their biological assets, getting 24.1 billion, and then they even made an exchange gain. So you wonder, like, Presco is an agro-allied company, and they make a lot of agro stuff, and most of it is actually consumed locally, but they have a very huge local demand that they tend to meet all the time, and then some of their products are also exported, and so it's a very solid company all around. If it's not in your portfolio, this is one of those stocks that you should have in your portfolio. But share price at the moment is kind of steep, though. It's like 700 naira per share. But again, guess what? The price to earnings ratio is just 6.8 times. So even cheaper than Julius Berger. So if you buy one share, right, you're just paying 6.8 times the earnings the company is making. So think about it. What it essentially means is that if a company is making 1 naira in profits, and it means you're at 5x, it means you're buying that company for 5 naira. See, very simple. That's really what price to earnings ratio means. So that's how you know whether something is expensive or not. So imagine if I'm making 1 naira per share, or 1 naira, or 100 naira, and I want to sell to you, and I tell you to buy it for 500 naira, would you buy? What if I tell you to buy it for 1,400 naira? You see, that's like 14x or thereabout. So that's really what this means. All right, so we go to Sterling Bank. So Sterling Bank also released their full year unaudited. So a lot of banks have their numbers out, but because it takes time to audit banks, some banks also want to release their numbers on time because investors just can't wait forever. And so they release unaudited numbers for the full year, just so that you can capture the fourth quarter results. And so Sterling Bank, or Sterling Financial Holdco as they're called these days, also released their numbers, and they posted a pretty impressive increase in pre-tax profit to 44.7 billion naira, almost doubled, or about 97.21%. Sterling Bank is one of those tier 2 banks that are always on the fringes, but looks like they've been going through a lot of I don't want to call it reconstruction, or essentially just try to change their business model. They've often toyed with adapt their banking to what you probably call more modern banking. They always find themselves on the fringes of maybe a new bank, or a challenger bank, or a traditional bank, trying to do something creative, but they've kind of struggled a bit. But so pretty good to see their numbers go up. This year, gross earnings, of course, was 328.3 billion naira for the year. Net interest income, 132.3 billion naira, up 58.73%. Earnings per share at 1.29, up 72%. Of course, total asset now for Sterling Bank is 3.52 trillion naira as at the end of the year. And then the customer deposit, that's the total deposit they have, pretty sizable deposit, 2.5 trillion naira. At the end of the day, Sterling Bank shares closed at 5 naira 90 kobo per share. And guess what their price to earnings ratio is 4.6x. So looks like it's kind of cheap. So we go on to the next company that released the result and that we also track, oil and gas company. Corn oil stocks has been on the fly for a bit now, gaining significantly. Currently trading at 387 naira per share, but at 21.2x. That is way expensive in my opinion. But let's look at their numbers. Corn oil pre-tax profit 13 billion naira year on year, up 12.45%. Revenue for the year was 323.1 billion. Up 60.4%. Gross profit also up 43% to 28 billion naira. Profit after tax was up 15.4% to 11.3 billion. One of the major drivers of growth for corn oil was also finance. Finance cost, wasn't really financial. Finance cost was actually up 98% to 3.8 billion, but they ended the year with a strong cash balance of 6.9 billion naira, even though it's down 38%, but I mean still a sizable amount of cash they have in the bank. Total assets 103.5 billion naira, return earnings 37.9 billion naira, while the shareholders fund is just 42 billion. So a bit of an expensive stock. So I'm not sure that this stock is one of those ones I want to put on in my portfolio because of the price. Another bank also releases numbers during the year, during the week, and that is Stanbic IBTC. And Stanbic is also launching its public offer. I think, at least I saw that in the news. Pre-tax profit 303.8 billion, up 75.7%. By the way, Stanbic is one of those better performers when it comes to the banking sector, and their share price is, I think, the highest in terms of price, not about how expensive it is, but the share price is one of the highest. I'm going to get to the share price in a bit, but in terms of their performance, net interest income up 134.2% to 410 billion naira. So you want to just compare that to Sterling. Sterling's net interest income was 132.3 billion. So you can see that and Sterling's gross earnings was 328 billion. So Stanbic is way bigger. It's a bigger bank. It's one of those banks that are on the fringes of joining the Fugas, just like Fidelity. So they're very close to joining the Fugas. And so the numbers were pretty impressive. Profit after tax up 43% to 202 billion naira, and the share price closed at 62 naira per share. Price to earnings ratio 4.1x. And so we quickly go to the last stock, Fidson Healthcare. Fidson also released its numbers. Revenue up 58.7% to 84.1 billion. Operating profit up 62% to 12.9 billion, and then pre-tax profit up 27% to 7.5 billion, and the share price closed at 20.9 naira. Price to earnings ratio 9.3x, a little bit expensive. So that is a rundown of stocks this week and the results. This has been Follow the Money, brought to you by Nairametrics. I'm Godre. Watch out for the second part of this show on our YouTube channel. We're going to be looking at certain stocks that are on our earnings list, stocks, or our watch list rather, stocks that we are thinking of buying. Until we do this again, do have a profitable week ahead. Goodbye.